Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's update our view on euro currency. Yesterday, the trading setup that we have considered as possible long entry around the XOP target has not been realized. It's just market has passed through this level as the hot knife through the butter and actually has dropped, showing actually no reaction on this XOP that we initially suggested might become the area where the market could try to turn with a major tendency. Currently, we could say even more that if we'll take a look at the daily chart, we will see a trend has turned bearish on the daily chart. And now we do not have any technical reasons actually to consider taking a long position by far, just because overall context is negative. And the one thing that we could do is either searching chances to go short currently or watch for strong levels where theoretically might appear some chances to go long, where it will be more or less safe. The reasons for this collapse, personally guys, I can't find the really background, because no specific news have been released, no events have happened, nobody has said something. So I suggest it might be just the starting of the year when investors start to form new positions. And this demand for United States dollar currently might be just, investors accumulating their currency to invest in the United States. So maybe that might be the reason, one of the reasons. Because currently I do not see anything in the news that could really trigger this action on the dollar. The second moment is actually a result of the first one, is that maybe currently markets start thinking more reasonable concerning the soft policy from the Fed, and now come closer to our position. As we said, that we should not expect too fast rate cutting from the Fed. So maybe this reassessment of this, euphoria has happened in the end of the last year. It's maybe turns to some more reasonable assessment of the current situation. We will see. But for now, let's take a look on the dollar index. We see a significant bounce on 10-year yields. We also see that yield is rising, maybe not as really fast, but at least it's coming back to the 4%. So here's also support the dollar. As a result, on the euro currency, we have this collapse, and the trend has turned bearish. And as I said, here we do not have any following technical rules. You can't consider taking the long position here. The only thing that we could consider in the nearest few sessions probably is an area around 109. This is strong confidence support on the daily chart, and it is accompanied with the daily oversold. So a combination of confidence with the oversold, as you know, calls as a bullish stretch pattern. This is directional pattern. And by the Chud-Napoli approach to the market's direction overrules trend. So it means that if even you have the trend bearish by the MACD, appearing bullish directional pattern means that your direction stands up. So that lets us to consider some bullish positions around this area. Once markets start forming some reaction on this level, maybe to form some bullish patterns on the intraday charts, we will take a look at it and maybe make the decision on some possible entry on the long side. For now, right there, I do not see any reasons to consider long position here, because on the in general situation looks really well. It could become even stronger downward direction, because on the 4-hour time frame chart, take a look what has happened. We already mentioned this. So market has failed to complete the OP, which is really a bad sign. So here's some kind of a slow upward direction, and take a look, market not only returned back to the below the necklines, which was actually more or less acceptable, it was not the strategy, but it has broken our confidence support. and it has been broken really fast, so without any response. So just market has passed through it, that's all. It means in turn that the next support stands around 108.82, and that is precisely our confidence area that we have here on the daily chart. But here's also important moment that very close stands the C point of this ABC, and it's really big chances that if market drop below the C, it will mean that after some time it would drop below the A. So it might be the action below 107, because if hand shoulders fails, market as a rule 90% it drop below the head. So that's why this current downward action, although now it seems that, well, maybe not really very strong, maybe market will reverse this situation soon, in fact could become significantly more extended than it seems right now. So from that standpoint, be careful. We will be watching for some bullish short-term patterns right there, but in general at the same time we should remember that stretch is a retracement pattern. It's not some reversal pattern. It just triggers the bounce up from this level until market abandon oversold area, but then major tendency could continue. So let's keep it in mind. Currently, in the current situation on the hourly chart, what we have, that was our, by the way, XOP, if you remember. So market just passed through it and just collapsed. So there's no reaction. Even on the OP was much better performance here than in our XOP. Now we have more extended ABCD pattern with the XOP round 109.25. So if the result of this touching an XOP, we will get some bounce. I do not know, maybe minor hand shoulders will be formed here, something of the sort. We will get the pullback either to the 109.87 area, the first fib level, or if we get like somewhere to the 110, we could consider possible taking the short position with downward continuation, because in general momentum here stands relatively strong, and market breaks some so-called, well, some kind of the bullish factors that we see on a 4 time frame chart. So it's just breaking it one by the other. Normally if market still remains bullish, it should not happen, and that makes us think that probably here might be some downward continuation as well from one of these levels. So we will see what will happen today, guys. Also don't forget that we will get the Fed minutes report, so also could make impact on the market.